Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 12th, 2025, and we're diving into Guardian Pharmacy Services' second quarter earnings report. Guardian, a leading long-term care pharmacy services company, has just released its financial results for Q2 2025. Joining us today is John, senior analyst from Smart Stock Watch, to break down the numbers and provide insights. John, welcome to the show.
Thank you for having me. It's great to be here to discuss Guardian Pharmacy Services, a company that's been making significant strides in the long-term care pharmacy sector.
Revenue and profitability overview. Let's start with the top line. Guardian Pharmacy Services reported a revenue of $344.3 million for the second quarter, marking a 15% increase year over year. John, what are the key drivers behind this impressive growth?
The revenue growth is primarily driven by low double-digit organic growth and strategic acquisitions completed over the past year. Guardian's ability to expand its resident count by 12% year over year to over 195,000 has also contributed significantly. Additionally, the adjusted EBITDA increased to $25.0 million, reflecting the company's operational efficiencies and successful integration of acquisitions.
However, we see a decline in net income to $8.8 million compared to $15.8 million in the prior year period. Can you explain this?
Yes, the decline in net income is mainly due to income tax expenses and share-based compensation costs incurred in this quarter. These are not reflective of the company's core operational performance, but are rather accounting adjustments post-IPO.
EPS performance and analyst expectations. Moving on to earnings per share, Guardian reported an adjusted EPS of 23 cents, which is significantly above the forecasted EPS of 7 cents from a survey of 4 analysts. John, what does this tell us about the company's performance?
This is a clear indication that Guardian has outperformed market expectations. The adjusted EPS of 23 cents reflects the company's strong operational performance and effective cost management. The diluted EPS stands at cents, but the adjusted figure provides a clearer picture by excluding non-recurring expenses and share-based compensation.
How does this performance impact investor sentiment?
Beating EPS expectations is always a positive signal for investors. It suggests that the company is on a solid growth trajectory and is managing its resources efficiently, which can boost investor confidence and potentially lead to a positive market reaction.
Strategic initiatives and market expansion. Guardian has been active on the strategic front as well. Can you tell us about their recent market expansions and acquisitions?
Absolutely. During the quarter, Guardian expanded its national presence by adding new pharmacies in Wichita, Kansas, and Seattle, Washington, and launching a greenfield pharmacy in Naples, Florida. Additionally, they acquired Managed Healthcare Pharmacy, marking their entry into Oregon. These moves are part of Guardian's strategy to strengthen its footprint in key growth markets.
And what about their recent secondary offering?
In May 2025, Guardian completed a non-dilutive secondary offering of 8.625 million shares, which increased their public float and enhanced trading liquidity. This move has expanded their institutional investor base without diluting existing shareholders, which is a strategic win for the company.
Future outlook and guidance. Looking ahead, Guardian has raised its full-year guidance. What are the updated figures, and what does this indicate about their future prospects?
Guardian has increased its revenue guidance to a range of $1.39 billion to $1.41 billion, and adjusted EBITDA guidance to $100 million to $102 million. This upward revision reflects their confidence in continued organic growth and successful integration of recent acquisitions. CEO Fred Burke emphasized their strong leadership in the assisted living facility segment, which is a key growth area for the company.
What should investors keep an eye on moving forward?
Investors should watch for further strategic acquisitions and expansions, as well as the company's ability to maintain its growth momentum in the competitive long-term care pharmacy market. Guardian's execution of its growth strategy will be crucial in delivering long-term value for shareholders.
Key takeaways. In summary, Guardian Pharmacy Services has delivered a strong performance in Q2 2025, with impressive revenue growth and an adjusted EPS that beat expectations. Their strategic expansions and raised guidance signal a promising outlook. Thank you, John, for your insights today.
Thank you for having me. It's been a pleasure discussing Guardian's performance and prospects.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Guardian Pharmacy Services' performance in the comments below. Until next time.